All right, let's do an end of day review for today. And today, Tuesday, September 12, 2023. And we are in the second day of this trading week. And tomorrow at 8:30, we will have a big, news, high impact news release tomorrow. So I would try to record at 9:30 to see how, in real time, how the credit will run. Let's say today we have it dropped 0.55% and the volume is 67. No, 67. I mean 60 million share. But actually, we capture here on Thinkorswim it's 66 million. There are discrepancy right there on this website and Thinkorswim platform. Yep, so it dropped 0.55. Okay, let's see what's easy setup we see today. So on the first trade we say is right here. Right, we can see this buy side liquidity were not taken, that means it dropped and go down to sell side, and you see auto block few huge fair value gap right here and retest. So we can go in either at this moment right here at 30 or 31 or 32 to the entrance right there. So that's the setup that we miss. Right, let's see. You see we have a fair value gap right there, auto block, fair value gap, retest, it's long setup. We have a sell side we were taken and buy side we were trapped right there. So that means that the target fit is gonna be very good to reach this buy side, and we get 97 cents right there. So it's 1 to 3 ratio right there. So that's one of the easy trade or low risk right there. We only reach 30 cents. I mean, actually less than 30 cents with 26 cents. Well, now look at here to see how do we miss this short setup. Well, after it raised the buy side, you see intermediately, retrace right there. You see retrace and retest that auto block. But if you look carefully, you can see that it's overlap. You see this auto block is huge. You see it retrace, create fair value gap, and this retest. Boom, go now. Boom, right here. So we can see that this is down move, right? We start going down. Then the trigger for it to go in is when we see that the sell side liquidity right here will drop right here. Right, we see the sell side liquidity will drop right here. You see it make a higher low right here. Drop right here. Yeah. You see the level gap right there? Yeah, that gives us a short setup right there. But hard to quantify this, right? We see right here. Yeah. Right here we have auto block, further gap, retest, and then we have auto block in this base sell auto block, further gap, and retest that auto block. Oh, I see. We can treat this an auto block also. Then we do have a setup right here. Auto block, and right here further gap, right, displacement, retest one, and then retest trap sell side liquidity, retest twice. Let's try to retest them. Then when we go short, we want to make sure we have a buy side liquidity. Yes, buy side liquidity over here. And the sell buy side liquidity will drop here, but it cannot take it because all this auto block is valid right there. That's the reason why I cannot take the buy side liquidity right there. Okay, so we have a setup right here. So we have the auto block, value gap, retest, and need a short setup. We have a buy side liquidity rated, and sell side liquidity trap right here. It dropped the sell side right here. This auto block is valid, switching it cannot make a higher high. Yeah, so we have to say something. Bearish auto block above is validated, so give a very strong signal right there. Normally we want, a signal when right here, we want to short right here, right? Not the perfect, we can short right here. However, if we want to wait, we have also, we can go in right here at 10.90. But if you go in right here, auto block, when this fair value gap right here is not really clear, right? It's not, yeah, you have implied right here. But later on you see more fair value gap right here, fair value gap right here. So the bearish auto block, which is this one we mentioned, is still valid. It's validate. That means it's good for confluent for it to go short right there. So entry time is 10.19 right there. and it's time 19, and our stop loss is okay. So if we go in right here, the stop loss, are we gonna put above 5 cents above this order block right here, or this high? $0.05. Okay, let's copy this. Let's redo this screenshot again. I want to see what is the risk reward ratio if we go in right here. Yeah, not much. We reach, let's say 5 cents above this. 447.82. So we reach 5 cents above that will be 87. Yep, so we reach 34 cents. And then what is our target then? Target is at least this, sell side liquidity, right? At least this level. So we have 1 to 2 risk reward ratio right there. But we let it run on the 1 hour time frame. Yeah, if we let it run the course right here, then we have right here, just below that. I don't see on the high time frame where we should identify targets. So we reach 34 cents. And we gain $1.40. Then how do we know this is the target, right? Now we look back, but back at the real time we don't see that. So I want to see on the high time frame, how do we identify that? So level is 44610 right here, 44610. Oh, we can use it, gonna check the prior day low, right, which is this level right here. That's its prior day low, the buy sell liquidity right there, right here. That is the level that we can aim. So right here, that's the level that we can aim right there. Yeah, 1 to 2 risk reward ratio, we can take the trade. Conservatively, you can let it right here. So we reach 33 cents and we get $1. So it's the 1 risk reward to risk reward ratio right there. Then okay, so our stop loss gonna be 447.87, right? This 82 right here, so it's 5 cents above that. And here in the middle, and we want, so reach 34, and we gain $1, almost, you know, 1 to 2 result right there. Okay, so let's do this again. Yeah, 1 cent above 447.82, 5 cents above that. So that's our stop loss right there. So basically the risk reward ratio gonna be 1 to 3 roughly. So we're gonna reach 34, and then we gain $1, 2 cents. So it's a low risk rate, right? You wait for this confirmation to happen right here. If we go right here, it will be perfect because it's really low risk right there. Excuse me, if we go right here. Yeah, anyway, let's take the screenshot for now and then one. Then on the block, fair gap retest, short setup. Okay, so yeah, we can go in right here also because we have auto block, and you see that photograph retracement and then retest them. So if we go in right here, our almost risk is very low. You see that 17 cents. Look at that. That's the easiest trade that we are talking about. But right now we're not there yet. We still practice. So that's the low risk right here. So we will wait. Right, we had to reach almost double 34, right? 14 to 34 is almost double. If we wait until 10, 19, but we go in early and hold right there. 957. We can say low risk entry. Yeah, let's do a low risk entry right there. you risk only 14 cents. Basically 14 cents. Low risk entry at 0957. It's only 14 cents versus at 10. Yeah, I think at 10.19. 34 cents. 34 cents right there. So if we entry early, our stop loss is very optimal, very small, very low risk right there. Yes, entry yeah, 19 right there, exactly 19. Yeah, the target's gonna be right below there. Okay, I think that's good enough for this one. Let's delete this one. I want to see how we gonna do a reversal trade right here. Okay, you have auto block, but follow up and a retest right there. It's also a very low risk right there. You can go in right there. Because right here it make another lower high right there. So basically it tells you that it dropped or a buy cycle right there, and you're gonna go and get it. So we go in right here perfect because we have sell side we were taken, and we have a ton of buy side we were taken, and very low risk. Look how much we risk. Come on. I mean, we risk almost nothing. So this one is, yeah, 5 cents below. Let's say we risk only 10 cents right there, right? Very low risk. And see how far we go. Man, you see that? And our reward is huge. Buy sell liquidity up there. So look at that potential. Man, $2.30 right there. What an easy trade, what a low trick right there. Low risk trade there for us. Never mind, I want to hide this one. I don't want it to show up right now. Okay, so we have auto block, follow up, retest. So we can go in right here. Just keep symbol, right? Yeah, but at the same time I want to move over here closer to here because I want to see the setup. Right here, you see if you make a high low right there, and at 11, 16. So what we have right here, let's put up here. What we have right here is auto block, forward up, retest. Because we know that today and yesterday the same, right? You're gonna go into the range. You're not gonna break it down further. You're gonna rebound. So that's the rationale right there. And also it checked the lower of the prior day right there. Setup. And we do have sell liquidity was taken, and we see the buy sell liquidity were trapped, and now we just going the stop loss, entry time 11:16, stop loss very minimal. I mean 5 cents below here, below 44610. Right there, very easy trade, very low risk right there. Oh yeah, I think I need to say what the risk reward right here. We read only 10 cents. Come on, and with $2.32. Look at that. $2.32. So what the risk reward ratio? 1 to 20. 23. Man, that's amazing trade. Very low risk, high reward trade. That's what we're talking about. Easy trade. The best trade is the easy trade, and effortless trade, and the lowest risk trade right there. But in order to go to achieve, effortless, easy, it takes lots of practice. So that's what we are doing, try to do every day, to practice, to set our mind in the same level with the market right there. We in sync with the market, we in perfect harmony with the market. That's the status that we are trying to achieve right there. So we have one short and one long setup right for today. Right, we have one short setup and then one long setup. Now we have a long setup first, and then we have a short setup, and now we have a long setup. So a 3 trade right there, 3 setup right there. Yep. And for this trade, the risk to reward ratio is huge. 120. That's giant. Alright, let's see what else we need to cover. Okay, look at the five-minute time frame. You see the 5-minute time frame. So you have a DR model, right? Let's remove some of this. So it just rate, this was buy sell right there, and then boom, move down. So wow, the DR model today is similar, right? It moved both ends, so it's not valid today. See, all the way here, you get 0.5 standard deviation in the downside, and then you swing up there and you get 0.5 standard deviation. Wow, look at that. This move, and this move bigger than this move. It take the buy side and then go down, take sell side. Oh, very interesting. Tomorrow, let's see. Let's mark this move to see how it break down this move. You know, tomorrow, this move. We want to see how it break down to the downside, and then you see the huge order block, failure gap, and reversal. Then we go long. Or we go short if we see rate of buy side liquidity and then do the auto block, failure gap, boom, going down right there. But anyway, today the DR model is not working because swing both sides right there. Okay, I think that's it for today, and talk to you later. Bye for now.